Hi, my name is Ben Reppond. Welcome to my YouTube broadcast. Today is April 12, 2023. Let's get into the analysis of the stock market. We're going to start with my dashboard, which I cover 6 major stock indexes and 1 government bond index. So the government bond index on the column on the left is TLT, and the others are the S&P 500, the NASDAQ 100, the Dow Jones Industrial Average, and the Russell 2000 Small Cap Index Fund, and the foreign developed markets, EFA, and EEM, the emerging markets. On the far right are dots, green or red. The green dots signify that this index is above, for a green dot, or below, red dot, it's 20, 50, 100, and 200-day moving averages. And the data in the center is, in the yellow box, is the data for the last week, and the data in the pink box is the data for the year-to-date, a little over a quarter. So we see at the top, we see that the NASDAQ 100 is by far the best performing index. It is up 19% year-to-date, above all of its moving averages. We go to the other end, and that's the Russell 2000 Small Cap Index, and it's slightly negative for the year. About in the middle is the S&P 500 with the ETF SPY, and it is up 7% for the year-to-date and up 1.36% for this past week. And again, it is above all 4 of its moving averages. By the way, the Russell 2000 Small Cap Index is below all 4 of its moving averages. Interesting. When we break the S&P 500 apart, we look at the 11 sectors that make up the S&P 500. They're all part of that index. The ones in the pink box are the year-to-date that have done the best from the top down to the worst at the bottom. And then on the right, you can see the green dots or red dots, depending on where they are with their moving averages. The technology and consumer discretionary, XLK and XLY, are the top 2 at the very top, and they are up 21% and 15% for the year. And then it drops way down after that, 4.9, 3.8, etc. And then the last 3 are negative for the year, all part of the S&P 500. The ones that are negative are healthcare, energy, and financials. Financials is almost down 6% for the year-to-date. So a wide range from -6 to +21 for the year. In the yellow box, you can see all of them were positive this past week. Now let's look at some charts. The S&P 500 is we can see for the last 6 months, from October to present, generally speaking, it's gone up and down a lot, but generally speaking, it's been going in an upward direction. And it was kind of flat for this past week. It went up slightly, but over that 6-month period, you can see the trajectory is favorable. When we look at inside the S&P 500, we look at the growth stocks and the value stocks. We separate those into 2 ETFs, SPY-G for growth and SPY-V for value. I make SPY-G the numerator and SPY-V the denominator, and develop a relative strength chart so you can see how they are relative to each other. And you can see from the beginning of 2023 until present, generally speaking, growth has been in favor. But if you look back over that previous approximately 12 months, you can see that generally speaking, it was a downward trajectory, which means for 2022, value was more in favor than growth. And now it's going the other way. At this point, growth is more favorable than value. Then I put large cap and small cap on a chart. I make small cap the numerator and large cap the denominator, IWM and SPY, and see how they are relative to each other. In other words, are small companies doing better or are large companies doing better? And you can see during 2022 that relative to each other, they were both going down, but relative to each other, small cap was doing a little bit better than large cap. But again, it went back and forth and back and forth. And then for the last couple of months, small cap has fallen out of favor. And we saw that on the dashboard. Relative to large cap, small cap is collapsing. So again, large cap is in favor and large cap growth is in favor. And small cap is out of favor at this point. It's an 18-month chart of the long-term government bond, and the ETF is TLT. So from last October, so this is about a 6-month period of time, the black arrow goes generally in an upward direction. And you can see for the period of time before that, the year-plus period before that, generally speaking, the long-term government bond was in a long-term period of decline. But now it has rallied and is going back, at least to some extent, going back up some. What that means is that as interest rates pull back, they decline the price of bonds and usually the yield on the bonds. Generally speaking, as the interest rates decline and the bond yields decline, generally speaking, the asset itself or the ETF is being pushed in an upward direction. The US dollar has been in decline since last October, approximately. Why? Well, that was the time, this is my opinion, that was the time when China and Russia and India began forming an alliance to buy oil from Saudi Arabia denominated not in US dollars. It is sometimes called the petrodollar. And it's an agreement we made a long time ago that all of oil sales would be done in US dollars, regardless of the country buying them or selling them. And these countries, China, Russia, India, along with Saudi Arabia, have agreed to buy and sell oil, those countries buying it from Saudi Arabia, denominated in their currencies, not the US dollar. So this is putting the US dollar at risk and is pushing the dollar down. And if the US dollar becomes not the reserve currency, this won't be good. I don't want that. And this won't be good for our country. It won't be good for our economy. And we've enjoyed the status as the reserve currency for about 80 years. And it has, generally speaking, helped our economy. But there is resistance to that right now. And so I think this chart shows where that trajectory was going up. And then you could see where the decline began. I think it's completely tied to those oil purchases. Gold. Gold has been on a run. It is going up. And you can see for a period of almost 6 months, the direction that gold has been going. And this is represented by the ETF, GLD. Silver, the same thing, except silver, during the early part of the year, for a couple of months, the silver had a sharp decline. I can't tell you why that happened. But then since the beginning of March, it looks like silver has been on a tear and actually going up faster than gold is. But the general direction of silver is up and the general direction of gold is up. When I put the two of them on a relative strength chart, silver's the numerator, gold's the denominator, you can see it goes up and down a lot. But when it goes up, that favors silver, silver meaning being stronger than gold. When it goes down, that favors gold. Gold during those periods would be outperforming silver. So it does go back and forth. But generally speaking, since September, silver, like gold, has been in an upward trajectory. Bitcoin for this year, and actually a little bit into late 2022, but certainly since the first of 2023, Bitcoin has also been on the rise. You can see it's gone up about 50, 60%. This is a 12-month chart. Prior to that time, you can see that Bitcoin was in a steep decline. And late in the fourth quarter, actually around the 1st of October of 2022, we developed a managed crypto strategy using an ETF, this ETF, BITO, to buy and sell BITO when it's favorable or unfavorable. And we started it in September. We were out of the market, stayed out of the market with Bitcoin until the 10th of January, at which time we came in and took advantage of a good portion of this run. So we're pleased to see that Bitcoin is on the rise again. Volatility index. The volatility index is a measure of downward volatility in the market. So if this goes up, that means there is the market is volatile in a negative way. If it goes down, it means the market, generally speaking, the S&P 500 it measures, generally speaking, is less in a period of less volatility. So with my artificial line at 24, this is now between 18 and 19 as of Friday, way below the 24. So this is, again, a positive indicator for the market. Asbury Research, they do 6 metrics, and all 6 of their metrics continue to be positive. So that's a good indicator for a positive sign of the market. They also do a relative performance showing which asset classes or assets are doing better than others. And these are measured in the 3 columns to the right, the last week, the last month, the last quarter. These are all relative, ETFs relative to each other. So you can see when it has a green box, it's the most favorable. Low volatility stocks are more favorable than high beta stocks. Large cap, more favorable than small cap, and we saw that in the previous data. U.S. is more favorable than developed markets for the last week, month, and quarter, generally speaking, and emerging markets. Corporate high-quality bonds are more favorable than high-yield bonds, and long-term bonds are more favorable than short-term bonds. When we look at the U.S. versus the world, the ones that come up are mostly European countries, and the UK versus plus the European countries. And these are the ones that are doing better than the S&P 500. And the S&P 500, the U.S. market, is doing better, but not enough better to get a green box. And that has been true for months and months. I selected the one that has done, I thought, the best, the most consistent over the U.S., and that was France. And the ETF is EWQ, and I do that EWQ as a numerator, SPY is the denominator, and so you can see for about 6 months that the French market is doing that much better than the U.S. market. And again, this is a short period of time, but you can see the picture of how that looks for that 6-month period. Gold and silver. The uh, spot price of gold, and you've seen the previous chart, they're both up. Spot price of silver is up to 2006, gold up to 2016, a gain of 2.1% for the past week. Silver spot price up 20 up is $25.25, a gain of 4.1% from previous week. The gold ratio, using the spot price, the gold ratio is favoring silver because gold is 80 to 1 the price of silver, when it is above, in my opinion, 40 to 1 approximately, that favors silver, and it's way above that. This is down, however, from the high a month, between a month and 2 months ago. It was 91 to 1. But because silver has been rallying faster than gold, it has brought the ratio down to 80 to 1. I started giving you these prices just so that you can use this if you want to buy silver. And I'm a fan of buying silver locally and from a brick and mortar shop. I counsel people not to buy over the internet because I do know people who have lost their money or have ended up with what they did not bargain for by buying over the internet. They didn't know who they were dealing with, and that's very unfortunate. So it's just better to check the ratings, the Google ratings, for example, on a local company, brick and mortar. You know who you're doing business with, and so I give you these prices. They come from my son, who's in the precious metal business, and I know that I'm getting good information, and it's relevant because it's hard to get this information out there without having to go to a shop and get it. So a monster box is 500 silver rounds, and you can see that there's 20 rounds per tube, and the cost of a monster box is $15,375. It was not too long ago, a few weeks ago, it was 12,000. So two things have happened. The spot price, as you've seen from the previous charts, has gone up, and the markup has gone up. I think it was 2 weeks ago, maybe it was three, where I put this on here. It was $2.70 over spot was the markup. Today it's $5.50, making, inside of a monster box, making the average cost of around $30.75. That's assuming you buy 500. If you bought a tube with 20 of them, that's $32.25. So the markup goes from $5.50 up to $7.25 per round. That's quite a bit. Now, if you think that's high, I said to Preston, I said, what is the cost of a silver eagle? What's the markup? He said, Dad, you don't want to know. I said, okay, tell me anyway. I want to know. He said, it's $15 over spot. So when you have a silver eagle. So when you have a silver eagle, it looks like the one on the right. This is not legal tender, so this is not a silver dollar, but it's called the silver eagle. It has that stamp on it. Some people want to buy the silver eagle. They don't want the generic rounds. They don't want the Canadian maple leaf. They want the U.S. silver eagle. But today they're paying $15 over spot. So if spot price is $25.25, that means the price of a silver eagle, and I don't know if this is in a monster box or a tube, I don't remember, was $15 over spot. In other words, I did the math, you're paying 60% more than the spot price just for the markup. So I said, does anybody buy that? He said, Dad, you won't believe it. I have customers that want Sober Eagles, and they will pay the $15 over. And I said, okay. If I were buying one today, I would buy the generic. I've always done that. Everything I've got is generic. I'm not saying it's better. There's a lot of people that do like the Maple Leafs, but you've always been paying a big markup for that Sober Eagle. But it's gone from $10 over up to $15 over. Just thought I would share that with you. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. Thank you for watching. If you have questions or comments, leave them in the comment section below. If it's a question, I will try to answer it. Thank you for watching.